In this video, we will see if XCN Coin will fall further. Watch until the end so you don't miss anything. There is a downtrend coming from a prominent top on the chart. Such downtrends work as an area of strong resistance in price action, and as long as the price fails to break through this trend line, the downward pressure will continue. However, if the price breaks this trend line to the upside, this can be a strong signal that the trend is reversing and the uptrend is starting. Breaking the falling trend line is usually accompanied by an increase in volume. If the price breaks the falling trend line with a strong candle and high volume, this increases the probability of a bullish continuation, and it is healthy to retest after the break. And there is a second falling trend line with a longer term compared to the first one. This may indicate that the market is facing more aggressive selling pressure, but the basic principle remains unchanged. The price is being pressured by this trend line, and the downtrend may continue unless there is an upside breakout. Such structures are important reference points, especially for traders practicing technical analysis, because these lines help to predict where the price may react and at which levels there may be reversals. The first downtrend breakout may come at this trend line, and the last point of support coincides with a critical level that has been tested more than once in the past, and where buyers have come in strongly. This suggests that the area is a very strong support area, and the price is likely to react upwards from here. Previous reactions from this level reveal that buyers are concentrated here and continue to defend this level. If the price reacts upwards from here once again, we could see a bullish wave similar to the previous moves. However, if this support level is broken to the downside and persists below it, selling pressure can be expected to increase, and the price can be expected to pull back to a lower support level. It remains to be seen if the price will experience a big bounce from here. And if the price breaks this strong support level to the downside and holds below it, we can expect the price to pull back towards a lower support zone as selling pressure increases. In this scenario, one of the most important levels that the price could reach would be the bull order block, where buyers are concentrated and have reacted strongly in the past. The bullish order block is a critical liquidity area where big players usually buy, and the price can initiate an upward movement again. If support is broken, there will definitely be a reaction from here. On the other hand, if the price gets an upside reaction from this strong support level and bounces off it, it is likely to move up to the bearish order block, one of the key resistance zones above. The bear order block is a critical supply zone where strong selling has come in the past. Big players have concentrated their sell orders, and the price usually reacts to the downside. Once the price reaches this level, it should be carefully monitored whether sellers will re-engage, as increased selling pressure here may cause the price to move down again. It is very difficult to break this bear order block in one go. It may break it after a few attempts. And when we look at the chart from a broader perspective, we can see that the current downtrend largely coincides with a similar price action in the past. It is noteworthy that, in previous periods, the price moved in a similar downtrend, and this downtrend resulted in a strong breakout and turned into a huge bullish wave. At that time, with the break of the downtrend, we see that the price gained a sudden momentum, buyers aggressively stepped in, and the upward movement continued strongly. Now a similar pattern has emerged, and the price is once again stuck in a downtrend. If history repeats itself and the price breaks this downtrend to the upside once again, it is possible that a strong bullish move could begin, as it has in the past. However, the important point here is how strong the breakout will be, what level the trading volume will be, and whether the general trend of the market supports this move. We will wait and see when the trend breaks. And in terms of the pattern, we can see that a descending triangle pattern has formed prominently on the chart. A descending triangle pattern is a pattern where there is a stable or slightly rising support level, often with falling highs, and usually a strong move in the direction of the breakout. In this pattern, the price moves by squeezing into a narrower and narrower area and eventually accelerates sharply in the direction of the triangle breakout. If the price breaks the upper boundary of this descending triangle pattern to the upside, a strong upward movement is likely to begin as buyers step in. After breaking the upper side, it should retest for confidence. Currently, there is no clear Elliott wave structure visible on the chart. For an Elliott wave formation to develop, the first and second waves need to clearly establish themselves first. According to Elliott wave theory, a rising trend typically starts with a strong impulse wave, followed by a corrective wave that tests the movement. Looking at the current market structure, we can see that these two waves have not yet formed. And for a potential Elliott wave scenario to unfold, the price movement must follow a specific structure. We cannot predict the third wave without the completion of the first and second waves. There is a clear descending channel structure on the chart. This type of channel is formed by price moving between two parallel trend lines, consisting of an upper and a lower band. In the recent movements, the price has bounced upwards after receiving strong support from the middle band. This shows that the middle band level is a critical support point driving the price action. However, if the price cannot break the upper band, it is highly likely that it will retrace back toward the middle band, where it may be tested again. In this case, whether the middle band provides support once more will be an important factor. If the upper band is broken, the price will likely rise more quickly after a retest. The price has been making lower lows and lower highs since the top. This indicates that the price movement has been consistently moving to lower levels, and the market is generally in a downtrend. Lower lows suggest that sellers are in control of the market, and the price is being pressured downwards, while lower highs indicate that buyers are unwilling to push the price higher, reflecting weak demand. If this pattern continues, it suggests that the downtrend is gaining strength, and the price has the potential to move even lower. If this trend persists, we could see even lower price levels in the future. However, if the price starts making higher highs and higher lows, it would signal a change in the trend. Looking at the Bollinger Bands, the price has bounced strongly from the lower band and is currently moving toward the middle band. The Bollinger Bands indicate that when the price tests the lower band, it typically enters the oversold region, and when it tests the upper band, it enters the overbought region. The bounce from the lower band suggests that the oversold condition has ended and buyers have started to take control. This bounce, along with the price moving toward the middle band, may signal the potential for more upward movement to begin. The middle band generally represents the equilibrium level of the price, so holding at this level could indicate the start of a stronger upward movement. If the price breaks through the middle band, it will likely continue to rise towards the upper band. This should be closely monitored. In the MACD indicator, if the MACD line starts to cross upward from below, it typically signals the beginning of an upward movement. The MACD is an oscillator that shows the difference between two moving averages, and these types of crossovers indicate that the market's momentum is starting to shift. A crossover from below the zero line suggests that buyers are beginning to take control and selling pressure is weakening. This can be a sign of a potential strong upward move. If this crossover continues upward in a sustainable way, the rise can become more powerful, and the price is likely to move toward higher levels. If this crossover reaches above the zero line, we could see a significant rise. In the RSI indicator, there is currently a clear descending trend. A descending trend typically indicates weak buying interest and continued selling pressure. If the price breaks this descending trend line in the RSI indicator, it could signal a change in market momentum and the start of an upward move. Breaking this downtrend and starting an upward movement in RSI suggests that buyers are beginning to enter the market, and selling pressure is diminishing. Such a breakout often lays the foundation for a strong upward movement. Of course, once the descending trend is broken, a retest is expected. After the retest, the price may continue rising along with the upward movement. In the Vortex indicator, if the blue line is on top, it signals that the upward movement is continuing, and buyers are exerting pressure on the market. On the other hand, if the red line is on top, it indicates that the downtrend is still in play and sellers are in control of the market. Right now, the blue line is about to cross to the top. If the blue line crosses the red line upwards, it typically signals that the market is about to move upward and buyers are gaining stronger momentum. Such a crossover could potentially indicate a strong upward movement, increasing the likelihood of the price starting to rise. The longer the blue line maintains its dominance, the stronger the upward move will likely be. When the price moves above the 200 EMA, it becomes a clear indicator of upward momentum, as the market typically shifts into a bullish phase. This suggests that buyers have taken control of the market, and the likelihood of the trend continuing upward increases. On the other hand, when the price falls below the 200 EMA, a bearish movement typically begins, as the market comes under the control of sellers, pushing the price lower. Currently, the price is still below the 200 EMA. If the price breaks above this level, it could signal the start of a potential upward move. Breaking above the 200 EMA indicates a shift in market sentiment toward the bulls, increasing the chances of rising prices. The 200 EMA represents long-term trends, so if the price breaks above it, a long-term upward trend could follow. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.